Hello, folks. This is Zaim Aslam, Chief Markets Analyst at Evertrade. I greatly appreciate, first of all, as always, for you guys to take the time out today and to attend this particular webinar. In the coming weeks or so, I will be holding a special webinar on oil. And I think it will be quite important for us to look at the different options that what to do with oil given the massive sell-off. But today is not about oil. Today is mainly about the FOMC meeting, which is due shortly. We have a lot of material to cover today, so I am going to go through a little bit more quicker. But as always, folks, remember that all these recordings will be uploaded on our YouTube channel, evertrade.com. And as always, please do remember to sign up for our next week's webinar. The next week webinar is about the it's a special webinar about the NFP right over here, as you can see. So please do go onto our website and then do sign up for that webinar as well. So just a little bit about myself. I work as a chief market analyst at Evertrade. I have a wealth of over 10 years of experience in investment banking and trading, worked with Bank of New York Mellon and Bank of America. And at Evertrade, I head the research for market analysis. So that's a brief introduction about myself. Now, a little bit about yourself, guys. So please do say if you say yes if but only those people who have been trading for let's say under a year. So say yes if you have been trading financial markets under a year. Okay, I see a lot of yes coming in. All right. Okay, so now only and only those people please type yes if you have been trading over a year. Okay, I see very few yes coming in now. But still there's a decent size there. So folks, the reason is that the reason that I've really asked this particular question is because I want to make sure that the information that I'm going to provide you very much comes on par with yourselves, meaning that you guys understand and I do not define things at a higher level. Obviously, this is a masterclass. This particular webinar does require some sort of initial knowledge with respect to the markets, but I will try to break things down as simple as possible for you guys. Now, the final question for you guys before we begin, please say yes if you have attended any of my webinars before. Okay, great. So I see there's a lot of people out there so who have attended, and I appreciate that. I appreciate for those of you who have attended these webinars before, and then now you have taken the time out again to come over here. Obviously, I try my best to give you guys as much information as possible in a small period of this time that we have half an hour space that we have for this webinar. So I really appreciate that. So let's begin without any delay. So as always, the first and most important thing is a disclaimer. So anything which we'll be discussing in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, folks, with respect to contact details, if you guys wanted to touch base with myself or with Evertrade, I am very active on my Twitter account. I do answer questions. Here are the handles for with respect to Twitter. This is the handle, my Twitter handle. If you do not have a Twitter account, I highly recommend you guys to get a Twitter account. Why? Because this is where you get the most amount of information very quick, because remember, we are trading financial markets where information is the key, having that leverage of that information. And in fact, by the time that the story gets published on Bloomberg and CNBC, the markets have already moved by that time. So, like if Donald Trump is tweeting, you wanted to have a subscription to his tweets straight away, notification to his tweets, and then make sure that you are understanding, as that tweet comes in. So it is very important. Similarly, this is the Twitter account for Evertrade. We produce, we tweet quite a lot on this account as well, with relation to our analysis with respect to different opportunities in the market. So again, I think it is important for you guys to follow them over here. So now let's begin with the next one. So on a daily basis, folks, on our AvaTrade channel, what we do is I produce 2 different videos. So for those of you who are more sophisticated, on our website avatrade.com, I produce fundamental analysis report. This is a written report. It covers the entire for industry for that particular day. It discusses all the major factors in a lot more detail and how they can really influence the market. Now there's also a simpler and a smaller version of that on our YouTube channel on avatrade.com. Again, I can show you how to find that fairly quickly. So go to YouTube, and then under AvaTrade you have daily analysis videos, and then you have a coronavirus videos as well, and technical analysis. So the purpose of this, once again, for these ones, sorry, let me yes, okay, let me just make this one maximize it again. So the purpose of these daily fundamental videos is that the information is a lot more simpler, it's a lot more concise. The video, is between 5 to 7 minutes long, and then you get to know what is moving the market, what are the important factors for you guys to watch for that particular day, and that's it. After watching that video, the why markets are moving higher, if this is a dead cat bounce, if the trend is going to continue, or if the trend isn't going to continue, and what can really stop the market. So this is what really I discuss in that video, and make it very, very simple. And then there is a special technical analysis video, such as today. Tesla earnings are coming today after the market closes, so you need to understand, okay, where are those important level of support and resistance. And that video with respect to technical analysis, again, it is uploaded on YouTube, and on a daily basis there is one video which just particularly focuses on technical analysis. So I will again recommend you guys to go through those videos and then watch them and then subscribe to those ones. Now, the agenda for today is the importance of the FOMC, right? So why that FOMC meeting is very important. Now, remember, we have several different central banks. Over in the US, we have the Fed. Over in the UK, we have the Bank of England. Over in Europe, we have the European Central Bank. In Asia, in Japan, we have Bank of Japan. In China, we have PBOC, right? But the one which attracts the most amount of attention is the Federal Reserve, which is the FOMC meeting taking place today, 7 p.m. London time, right? So it is at that particular time that the Fed really decides about increasing interest rate or lowering interest rates. And whenever that happens, it brings enormous amount of volatility in the market. Of course, the Federal Reserve does hold some emergency meetings as well, unexpected meetings, like the ones that we have seen in the previous weeks when the Federal Reserve cut interest rate and it is sitting near enough to zero. Again, I'll discuss that in a little bit later. But that is the importance of this, is that the US is the biggest market in the world when it comes to the equity markets, or so the Federal Reserve, it has enormous amount of importance when it comes to market activity, right? So what is expected with respect to that? Let me jump to the. I'll discuss that just in a bit. But then on the back of that, we will also discuss what instruments to trade. Now, when it comes to the FOMC, the Federal Reserve, anything which is dollar denominated, it can be traded. So whether it is your indices such as the such as the Dow Jones, the Nasdaq, the S&P 500, or even if it is gold, because it is pretty much denominated in dollar terms. So we are expecting big moves in the dollar index as well, in the gold market as well. Obviously, the dollar index is as the reverse of that. But don't worry too much about these ones, because I am going to go through each and every single instrument just in a bit. So this is just highlighting the main agenda and then what exactly to expect from this webinar. And then we will look at the current state of market and analysis. Again, this will be very much tied with respect to the instruments to trade and defining levels and defining strategies. Now, let's move on. So what is expected from the Fed? So feel free to take the screenshot of this particular slide if you want to. So again, at 7 p.m. UK time, we are expecting for the Federal Reserve to come out with this monetary policy. The Fed will not embark, first of all, the Fed will not embark on new policy actions regarding interest rates, monetary stimulus, or market stabilizations measures at current meeting. Now, in very simple term, what it really means is that do not expect interest rate cut, do not expect any new monetary policy action by the Fed as well, meaning there will be no further announcement or further increase in monetary policy or anything with respect to that. Now, the second point is the economic assessment will acknowledge that a record steep decline in economic activity is underway, right? And it will also signal optimism for a brisk, clearly not a V-shaped recovery after the lockdown has ended. So again, in a very simple term, for you guys to understand this, the Fed is going to acknowledge, they're going to say that yes, there is enormous amount of a weakness in the economic data, but remember when the economy is about to go to exit from its lockdown measures, so we are expecting a recovery, but that recovery isn't going to be V-shaped. A V-shape is like, if you see my mouse, it is just like this, like just a letter like V. But in fact, the recovery, I think, in the economic numbers is going to be very much L-shaped, where the market drops like that, that the economic data drops like that, then it moves like here, and then it goes back up. So it's more like a U rather than L. So let's just say that it is going to be U. So the outlook for inflation has deteriorated. Again, this is something which really doesn't really matter at all, because inflation is not something that the Fed is really looking to do anything with that as well. So the press conference will be held 30 minutes after the release of the meeting statement. The chairman will undoubtedly be asked about remaining tools. So that this is the most important bit. I would say that the press is going to really push the Federal Reserve chairman to ask him that, okay, look, you have lowered the interest rate, which are already sitting at zero. You've increased the quantitative easing purchase program. Okay, what is next? Because you always said that yes, there will be more tools, that there are more tools left in the Federal Reserve basket or in the bag. So what are those tools? Do you think that there is a possibility of negative interest rate, or what are other tools that you really talk about? I think this is what really is going to be pushed on today. Now, whether he's going to give any answer on with respect or any clarity, I do not believe that is going to happen. I think there's going to be a lot of ambiguity around that. I think that we expect him to signal that ample policy option remain. Again, that is what he is just going to play with his words rather than actually provide very, very clear answers. Now, this is the entire summary of the FOMC meeting with respect to fundamentals. Now, nothing in this particular, what we have over here in these 5 points, nothing over here is really going to move the markets enormously, except for the Fed, except for the point, that the last point, when he will talk about his toolkit, this is where we can expect some sort of abnormality coming into the market, some sort of a volatility coming into the market. On the back of that, we can see enormous moves in the equity markets. We can see big moves in gold market as well. So I want you guys to understand that this is the agenda. Anything which is beyond this. Now, for instance, if the Fed comes and then decrease the interest rate is and surprise the market, then of course there's going to be enormous amount of volatility. That means higher moves for the dollar for the gold price. Again, we will discuss that shortly. But as long as the agenda remains within this defined criteria, I think we will be safe. Now, do you guys understand? Fire me any questions that you may have. Remember, there is always no such thing which is called, stupid questions. If you are unsure, ask me questions. This is the time for you guys to ask them. So Ian is asking what are the best sites to, you can go to the Federal Reserve site, so everything is pretty much published from the statement point from that. But again, do not get too much jiggled down, because whatever they will say, the market is going to react pretty much straight away right at that time. but the snippets of those, anything which really matters from the Federal Reserve's press conference or from the statement, it will the snips of that, they will be published in all the major media channels, our outlets such as CNBC, Bloomberg, and so on and so forth. So you will get that. So I wouldn't really vary too much that where exactly it is. Of course, it is important for a sophisticated, for investors who really wanted to go much deeper and then really see what really means. But in overall, I think when the market is really going to, when they're going to announce that, the market is really going to factor all that information right there and then. Okay, so when I say that we are safe, that means that we have formed an hypothesis, we have formed a scenario. So as long as that there is no change in monetary policy, there's no change in interest rate, right? So do not expect too much of a moves in the market. So that means that you won't be get caught. The likelihood of you getting caught on the wrong side of the trade a lot more less than as compared to if the Fed comes out and then all of a sudden there's a surprise, and then if you have a long or a short position, and then the Fed statement or the scenario that we have discussed, and this is the main scenario where the market has, what the market is really looking at. And if there is any surprise, then yes, it is not safe at that particular time. Why? Because the Fed has pulled something which the market wasn't really expecting, and that means incredible amount of volatility in the market. Okay, so what aspects are likely to be affected by this statement? Yes, the answer is forex market. Of course, anything which is in the dollar denominated, euro dollar, sterling dollar, dollar yen, and anything again which is dollar denominated. Equities, your Dow Jones, your S&P, your Nasdaq, right? And of course your VIX index as well. And thirdly, the precious metal, and I'm speaking of gold now. So let's continue, and then let me bring out the instrument charts, and then see. Now let's analyze the market, and then let's see what really to expect, right? Because obviously that is the most important thing for us to do. So what we're going to do now is we're going to look at, so I'm gonna focus on the analysis. So you may want to hold off some of the questions because I will be purely focusing on the price analysis right now. So what we have in front of us is MT4 platform, and I'm sure that many of you have seen this platform before. And that in terms of a time frame, I always begin by looking at the weekly time frame. Now I am going to take a little bit slower for the first chart, but for the remaining charts, we are going to fly pretty quickly from them. And because I will, everything is going to be very much the same with respect to indicators and so and everything else. So let me first of all delete some of the indicators which we do not really need for this particular webinar. There we go. So, and we don't need the Bollinger Band as well here. Okay. So the only three things, or the only three different indicators on my chart for the Dow Jones are your moving averages, right? So I have three different kind of moving averages, which I always pay attention to. And this is where institutions, smart money really pays attention to as well, with respect to if the prices are above or below them. So if, for example, prices are above those moving averages, that means bullish sentiment is very strong. And if the prices are lower than are below those moving averages, that means the sentiment is weak. So institutions are likely to take bearish bets based on that. So first of all, what I have is, this is your 200 weekly moving average, simple moving average, right, on your weekly chart. Then you have 100 week moving average shown in orange, and then after that you have 50-week moving average shown in pink. Now when I look at a weekly chart, the first thing that I do is, where are we with respect to these moving averages? If we are above these moving averages, like we were over here right at this during 2017, there is nothing to worry about. But the moment that the price starts to break below the 50-day moving average, like it did here, there was certainly a concern. And then when the price moves below the 100-week moving average, then of course there are more concerns. But when the price comes near the 200-week moving average, then there is an opportunity in the market. Why? Because most of the investors, most of the institutions are likely to buy whenever the price touches the 200-week moving average. So as you can see, it happened in 2011 and it also happened back in 2015. Sorry, I think my throat is, hopefully it's not corona, but yeah, it's just getting a little bit too dry today. Right, so that is why I really pay close attention to these moving averages, because 200-week moving average on a weekly time frame is very, very important. Of course, the 50-week moving average is equally important as well, but the 200-week moving average is very, very important. So since the recent sell-off, the massive sell-off that happened and then pushed the prices back in this territory right over here, let me mark that on the chart for you guys. We came into this interesting area of support. The price moved back sharply to the upside. And of course, throughout the period, we have heard many commentators talking about this, that yes, prices are likely to return there to this level, but so far we haven't seen that. And how we are going to see that? That is the question. That is the main question. If we're going to visit this area, the only possibility of that happening is if the price breaks below the 200-week moving average. So far, price is very much holding above the 200 moving average, as you can see that on a weekly time frame, and each candle over here represents a week. Remember that. So we still have 2 more days left. If this candle closes above the 200-week moving average, guys, the bottom is there. That's it. There is no going back as long as the price stays above the 200-week moving average. The only way for the price from there onward is to move to the upside, not to the downside, but stay to the upside. It will come and challenge the 100-week moving average. We may see some sort of a resistance over there, but again, once the price cleared that will further that will further strengthen the price, and then the chances are highly likely that the price is going to continue and it is going to move to the upside and then go all the way to its previous heights. Now the situation is very, very similar. Forget about all these lines, just pay attention. Let me just actually get rid of this Fibonacci ratio. So again, the situation is very similar for the S&P 500 weekly chart as well. That the price crossed above the 200-week moving average on the weekly time frame, and then we knew from that time, from that particular time, that okay, S&P 500 index is a stronger index as compared to the Dow Jones index, because Dow Jones is really coming to challenge its 200-week moving average now, while the S&P 500 index has already crossed above that. So this is a positive sign. But the challenge for the S&P 500 index is that it has tried to break above the 100-week moving average twice. First was not the last week, but the week before, the price came and it touched and kissed that the 100-week moving average, but failed to close above that. Then again, it happened last week. The price came and then it tried to go above that, and then had but we never had a close above that. But this particular week, we actually have a real chances for the S&P 500 index to close above the 100-week moving average. Now, if that happens, then that is likely, then it is highly likely that the Dow Jones index is also going to continue to move. So I think for us right now, we are at a very critical stage. And to answer the questions, if we are ever going to visit this one, the answer is right over here. If we close above the 100-week moving average, stay above it, no, we're not likely to come and visit this particular price action anytime soon. The only momentum is going to be to the upside. Now, when it comes to the NASDAQ index, we are all in clear because the price came. Remember the importance of 200-week moving average. See how good that was, because price came near enough to its 200-week moving average. It didn't even drop below that, and that it just bounced off from that level straight to the upside. and it not only cleared the 100-week moving average, but it also cleared the 50-week moving average. Now the price is there's only a marginal distance from its all-time high before the price touches this. And while we are all talking about that, yes, there is going to be a depression, yes, there is going to be a deep recession, remember, in just less than 5 or 6 minutes time, we are going to get the US GDP data. The market is going to be all over the place. We will hold this webinar. We will continue to monitor that situation while the data comes, and we will see the live price action when it comes to the gold price as well. So we are moving to that direction shortly, and then I will show you how that data is really going to move the market. But again, what I'm trying to say is the US GDP data is about to contract massively. There's going to be massive plunge. Market is going to be all over the place after that. But when we look at the S&P to the Nasdaq index, it is well above all the previous moving averages, which really served that break-even point or that critical point, not the break-even point, that critical point whether the market is going to visit its lows or not. So we are well above that point. So that is very, very important. Now, quickly going through the DAX index on the weekly chart, of course, this index is much weaker than the US indices because we are nowhere close to any of the three important moving averages on a weekly time frame. We are well below that. And because of this particular reason, I think the DAX index isn't really the best index to come to trade. But with respect to risk to reward ratio, we are pretty much sitting in the middle, because if this is the peak, this is the low, we are sitting at right in the middle, and that we have huge amount of resistance coming between the gap of this gap, which is between this candle and that candle. And of course, on top of this, we also have some resistance coming as well. For FTSE 100, again, the situation is very, very similar over here as well, because the price is well below all the important moving averages. It hasn't been able, there's a long time for these for the price to really move or to come close to any of these moving averages. So these indices, especially the DAX and the FTSE indices, are much weaker than the US indices, right? Now let's have a look at gold price, right? So right now, as you can see, gold price is still trading somewhat strong. Now this is the daily chart, right? It is strong. Why? Because it is above all the three important moving averages. Because this is a daily chart, the moving averages have changed into daily moving averages, not weekly. This is very, very important. So as long as the price is above that, that is fine. Now, as the US GDP data comes, it is expected anytime. So let me just quickly bring that data, that Twitter element quicker, and this is the Bloomberg platform. So don't be. So we are going to have a look at something about Gilead Science results expected this week. Okay, so the data is about to come in any minute. It's the 1329. This is I just wanted to show you guys that how the prices are really going to move. This is your gold price, obviously trading at a critical level right now. So let's see how the price will react. 1709, the data coming in anytime now. Come on. Why it is supposed to be ticking in at this time. So let's quickly have a look at why the data hasn't really come in yet. I mean, it should, unless of course I have read the numbers a little bit wrong, but I'm pretty, so let's check. So in order for me to check those numbers, all what I do is I go to Forex Factory, and then this is where I really see those numbers. So the US GDP number is due, but for some reason the data is delayed. It hasn't hit the terminal because it is due, and I mean it should come out. This is very, very interesting. I read that why the data hasn't been reported yet, because as you can see, 12:30 GMT, which is 13:30 UK time. We continue to discuss data. It's more news about. Wow, so I think the Gilead stock is going to be really interesting, folks, because the trial for COVID-19 has met primary endpoint. So I think the shares added, what is that? Shares added, sure thing, okay, share added. So it's more about Gilead, but why the economic numbers are not coming in, this is very interesting. Has any of you guys have seen the numbers? Because look, the gold price is moving. Gold price is moving to the downside. So the number is definitely out, but it is not over here. What is going on over here, really? So this is obviously Bloomberg TV. Just trying to see. Obviously, she's also looking for those numbers as well for the data to come. As you can see, I think they're reporting Gilead more than anything else. Can you guys, are you guys seeing anything on okay, some people are saying investing.com, GDP 4.8, investing.com, big moves on the S&P. Minus 4.8 is, so is that what you guys are saying? Let me see. There you go. The numbers are coming. US dollar is shrinked. There the numbers are coming. So US, I just saw that. The economy 4.8. Wow. Okay. So even Bloomberg has, reported. Now the numbers are coming in, you can see. So I think investing.com was much faster to report this number than anything else. So obviously the data came much lower than anywhere else, because it was expected to drop by -4%, but obviously the data, the GDP has dropped a lot more than that, and Forex Factory still hasn't updated it. Now the numbers are literally coming in, which is -4.8. But this is really interesting that how investing.com really reported the number a lot more faster than anyone else. Even Bloomberg wasn't able to do that. Yes. Okay. So let's have a look at at S&P 500, right? So see how those moves were, because some of how big those moves have been on the back of that. Obviously, you can see that the green candles are coming in the last 5 minutes. There you go. Or the GDP contracted, but I think the data it's like 2,918. It touched. So this is, the market has really taken the data as a positive sign overall, and that is what we are really seeing. Because even if I look at gold price, right? So let me just readjust this. So gold price has obviously moved to the downside, but the S&P 500 futures have moved to the upside, and the markets have really taken this data as a positive sign, because even though the numbers were very, the expectations were 3.5, as CNBC is reporting right now, but the economy shrank 4.8. But despite that, I think the market is still taking this with a pinch of salt, and then they're saying that, okay, the recession, obviously this is the start of a recession period. There is no doubt about that, but the markets are still taking this number somewhat positive. Now let's have a look at those important critical levels with respect to S&P 500 index, and then see where the markets can move. Now this is I've switched the chart. I've gone into a daily time frame for the S&P 500 index. If the market continues to move higher, for me, the most important resistance level for now is where the 100-day moving average is coming in. And that 100-day moving I think the markets are really, now the reports are coming in that the markets are really moving on the back of Gilead coronavirus treatment rather than on the GDP. So that is the reason that we are seeing this moves to the upside. So, you know, like earlier you guys were saying that, okay, the markets are moving. We were really trying to figure out that what exactly is happening. So so let me explain it to you. So the GDP numbers, they have come a lot more weaker. The US economy is clearly in a recession, right? So that was expected. But the reason that we are seeing the upward movement for the equity market is because Gilead Sciences, as we have seen from Bloomberg Terminal, the Gilead Sciences really reported that yes, their treatment has become more positive. That there are positive results about the treatment, and because of that, the equity markets are moving higher. So the markets aren't really moving higher because of the GDP number, because like I said, you know, the earlier we were talking about that the number is a lot more weaker than the expectation. And of course, now it has declared that the recession is an official, is an official thing for the US, and of course it is going to be the same for the rest of the world as well when they will report the GDP. But the fact that Gilead Sciences has produced positive results with respect to its treatment of COVID-19, that is really that has overtaken anything else. So for now, the markets are moving to the upside. For me, the more important thing is that if the market comes into near its 100-day moving average on a daily time frame, this is where my resistance levels are. But with respect to gold, the movements were there, but nothing major really happened on the back of this, because you know we were trading in around 1705. We didn't even go beyond 1702, so that is certainly a positive. So the reaction has been very much positive and negative when it comes to gold price as well, because again, on one side we have a GDP number which was expected to drop that much anyway, so no surprise. But obviously the number was slightly more worse than the expectation, but it was expected for that number to be worse anyway. But so overall, I think this reaction to the downside which we are seeing for gold price is going to fade away on a longer term, or in the coming days or so. All right, folks, this is pretty much where we are going to really finish our webinar. But before we do that, let me go through quickly some questions if we have here. So some people are saying big moves on the S&P. We know why those moves really happen. That reported. So what is the side which reported faster? Guys, I think Forex Factory is pretty good. It reported pretty much straight away, but obviously today there was some glitch or whatever happened. Investing.com reported it a little bit earlier, but it doesn't really happen like that really. I think today has been just really an exception with this one. What about GBP USD and Euro US dollar, up or down? Okay, so let's have a quick look at Euro dollar. Again, we will go to a 15-minute chart. What we are seeing is some sort of a weakness in the dollar index, obviously, and the euro has moved up because the numbers were weaker. The US GDP numbers were weaker than the expectations. Again, it was expected, nothing new about that. But in terms of a resistance level, when it comes to euro dollar, I will do a full and technical analysis on this one in the coming days. But for now, I think for me, an important level of resistance is just right over here on top of this particular candle right over here. So let's see if the price really comes and runs into it. But overall, on a daily time frame, you can clearly see that the trend is to the downside. Why? Because prices are trading below all the important moving averages. And in terms of a support zone, I think that the base over here with this consolidation zone can act as some sort of a support level, but this is not obviously the best support level. The better support level for me is right over here at the bottom of these particular candles, right over here. And I'm going to wrap it up another line by just bringing some of these candles, the open of these candles right over here. So that is a better level of support. This is also equally valid level of support, but this is for active investors rather than passive investors. In terms of resistance, keep focusing on over here. For Tesla chart, please have a look at the YouTube video. We have done full technical analysis for Tesla chart. I can quickly show you the chart over here. So these are your support and resistance levels that we are really looking at. So someone is asking, with the GDP news and tonight's FOMC season, would you say gold will remain bullish? I say it is highly likely that the path of least resistance for the gold price is skewed to the upside, because the Federal Reserve is going to find incredibly difficult to talk about the exit strategies from their loose monetary policy. All right, folks, we have run well over the time. Thank you so much once again for attending the webinar, and we will speak to you guys soon.